Welcome back everybody. Your typical bull here, and today we're going to talk about a way that you can spot market reversals before they happen. Before we get into that, what do you guys think of the new video? Let me know down in the comments below, and please do remember to click the like and subscribe button on this video. Your support really helps the channel to grow, and it is very much appreciated. So today we're going to be talking about divergences. What is a divergence? A divergence is basically when your price is showing one thing, but your indicators are showing the other thing. And it can show signs of either an uptrend weakening and losing steam before it goes down, or it can show signs of a downtrend, same story, weakening and losing steam before it goes up. So the tools that we will need for this are just this trend line, and I'm going to show you the most common indicators used for finding these divergences. So first up, we're going to do the MACD. We're going to use the standard 14-day relative strength index, or RSI, and we're going to use a stochastic set to 5, 3, and 3. Now you can also use some other indicators. The on-balance volume is one that's used quite often, but just for the scope of this, we're just going to be going over the most common. So first of all, we need to define a couple of things. We need to define swing lows, and we need to define swing highs. So in a trend, things move in waves, right? They move up, they move down, they move in waves. They don't move in a steady straight up or straight down line. So in an uptrend, you have swing lows and you have swing highs. So this is what an uptrend looks like. This is a swing high, this is a swing high, this is a swing high, and this is a swing high. And then you have your swing lows. So these swing lows, basically they look like V's on your chart. And then same thing for your downtrend. This is your swing high, this is your swing high, and then you have swing lows in your downtrend, right? So let me show you what those look like on the chart. See, right now, we can obviously tell that this is in a downtrend. This is a swing high, this is a swing high, this is a swing high, then you have a swing high here, and a swing high here, and then here you have a swing low, a swing low, a swing low, and a swing low. And then obviously your trend starts to change here, and you make higher lows. And now these are your swing lows for your uptrend, and these are your swing highs for your uptrend, right? So they make like these V-shaped patterns on the chart. Okay, so now that we have defined that, what we want to do is we want to connect, in a downtrend, we want to connect these swing lows to one another. Now, just for clarity's sake, you can connect any swing lows. So you can connect this swing low to this swing low, or you can connect this swing low to this swing low, but the more recent stuff is going to be more prominent, and you cannot cross other price action with this. So, for example, if I wanted to connect this swing low here to this swing low, I can't do that because it crosses through this price action, this price action, and this price action. So it's valid as long as we don't cross other price action. So we could use this, we can use this, we can use this, right? So the more recent the price action, the more stronger it's going to be. So now, what's next? What we want to do now, we've got our swing lows connected here. We want to look straight down from there at our indicators, right? And we see that our price is making lower lows, but our MACD is making higher lows. Our RSI is making higher lows. I'm sorry, my lines are not straight, but trust me here, this is definitely making a higher low. Our stochastic is not quite showing divergence, but it is making the same low. And then what happens shortly after that? Price reverses and moves up, right? And now let's just go over a couple more of these. Let's look at something a swing high. And I don't know if this is going to work or not, but I'm going to give it a try. I haven't checked this stuff yet, so let's get our trend line tool out. We see a swing high here. And of course, there's the swing high there. And straight down from there. What do we see? Our MACD is very obviously making lower highs. And our RSI is very obviously making lower highs. And our stochastic is not quite making lower highs here either. But we have two of the three that are showing divergences. I don't know if I'd call that one a divergence though. But what does this show us on our charts? What this shows us is a stock that is making an uptrend, but it shows us that our market strength at the same time is weakening. So this can be an indication of a reversal, but it doesn't mean necessarily that it will reverse. If I am following another strategy, let's say for instance, if you've been following some of my other videos, our support and resistance strategy that we've been following, the SR rejection strategy, we know that this is a very valid support level, right? So at this level, we're already looking to buy here. Now, just as an added confluence, we just say, hey, you know what, let's just check and see what's going on here. Maybe we got some divergences going on as well. So normally, we wouldn't buy this or even be watching this until we get this confirmation candle here, right? And we generally wouldn't be able to even start watching this until we start seeing some green off of these levels. But if we check for divergences here, we see that we do have some divergence going on. So we see our market strengthening while our price is still showing some lows. So we can possibly catch this reversal or be watching for this reversal a little more closely now that we see those divergences. Right, so anyway, this is going to be a rather short video than normal, and I do hope that it helps you guys out. So please do remember to like, subscribe, and comment, and we will see you in the next video. Cheers.